All right, so say you're about to head into this meeting, right? And you need to get up to speed on Netflix, especially with their Q4 earnings report coming out January 21st.
Yeah.
So we're going to do a deep dive into a Motley Fool article that really kind of breaks down how they've been performing.
Gotcha.
And maybe gives us some clues about what we can expect.
I think it's really interesting. We're not just talking about whether Netflix is a good investment, right?
Yeah.
But like how they've just become like such a dominant force.
Oh, for sure.
In entertainment.
Absolutely.
Like it's kind of crazy.
It is. And this article highlights that their stock tripled.
Wow.
Between 2023 and the end of 2024.
Really?
Like, it even hit an all-time high in December.
Wow, that's impressive.
It is. But, it's behind that growth.
Yeah.
Is it just hype, or is there, something more substantial happening?
Well, if you think back to 2022, there were a lot of people who had doubts about Netflix's future. They were losing subscribers, and their stock was, plummeting.
Right.
But I think what's really impressive is how they turn things around.
Yeah.
They really focus on two things, like laser focused, sales growth and operating margin growth. So basically, they found ways to bring in more revenue while controlling their costs.
Yeah.
And it led to record profits.
Yeah. And this article throws out a stat. Okay, you ready for this?
Hit me.
Netflix accounts for 8.4%.
Whoa.
Of daily U.S. TV screen time.
That's a lot.
Second only to YouTube.
It's a huge chunk. Yeah.
That's a massive chunk of people's attention.
It really shows you, the impact they're having on how we even just consume entertainment these days.
Totally. And, the article points out that this success, it's not just about subscriber numbers anymore. It's about capturing a significant portion of our viewing time.
Yeah, that makes sense.
Right. And speaking of capturing our attention, content is key, right?
Oh, absolutely.
The article talks about how Netflix has shifted from this quantity over quality approach to really prioritizing these high quality shows and movies.
It's all about quality now, right?
Yeah.
They've really realized, if they want to justify those price increases and keep people engaged and wanting to, to watch, they have to make good stuff.
Exactly.
And think about some of those hits that just dropped in Q4 of 2024.
Oh, yeah.
Squid Game, Season 2, Outer Banks, Season 4,
Outer Banks.
Love is Blind, Season 7.
Oh, God.
These shows generated massive buzz.
Yeah.
And they kept people coming back for more.
Okay, so how do those recent hits translate into actual dollars and cents? What's the outlook for their upcoming earnings report?
Yeah, so Netflix is projecting $10.13 billion
what
in Q4 revenue.
Billion?
Yeah, a 14.7% year-over-year increase.
Wow.
So that's not only a record for them, but it suggests that this whole content strategy is really working.
Okay, so that's a pretty massive jump in revenue. Does that mean everything is, sunshine and roses?
Right.
Or are there any potential downsides investors should be aware of?
I mean, that's a good question.
Yeah.
So while those revenue projections look fantastic, the article also points out that operating margins, they're expected to be a little bit lower than the previous quarter.
Okay, so a little dip?
Yeah, it's typical for Q4 because, they spend more on marketing.
Right.
And those, holiday content releases.
That makes sense.
But, what's important to remember is that despite that, little dip, they're still projecting a 46.4% year-over-year increase in operating income.
Gotcha.
And a pretty healthy 21.6% operating margin.
That's still good.
Yeah, which is up 4.7 percentage points from the previous year.
Okay, so even with a dip, those are still pretty impressive numbers.
Yeah.
But let's be honest, every time a company starts, raking in the cash, we can't help but wonder, are they going to raise prices on us?
Totally.
The article kind of hints
at
the possibility of a price hike in 2025.
It makes sense.
Right.
That's where Netflix's, monetization cycle comes in.
Oh, yeah.
Right. It's this idea that if they consistently deliver top-tier content that people crave, then they can kind of justify raising prices from time to time.
Okay.
Remember, their standard plan's been at $15.49 a month since 2022.
Yeah.
And premium went up to $22.99 in 2024.
Right.
So it's definitely something investors are going to be watching.
Totally.
For sure.
Yeah, so if they keep knocking it out of the park with their content,
Yeah.
and they convince us that it's worth paying a little bit more,
Uh-huh.
how does that affect their overall value as a company?
Well, one common way to assess a company's value is by looking at its
Okay.
price to earnings ratio,
Okay.
or PE ratio for short.
Okay.
And basically, it tells us how much investors are willing to pay
Okay.
for each dollar of a company's earnings.
Oh, shit. Okay.
Does that make sense?
Yeah. Okay.
And in Netflix's case, their PE ratio is pretty high
It is. Yeah.
compared to companies like Meta and Alphabet, right?
Right.
So what does that tell us? Does it mean they're overpriced?
Well, it's not quite that straightforward.
Okay.
A high PE ratio can indicate that investors are really optimistic
Sure.
about a company's future growth prospects,
Okay.
even if their current earnings aren't, sky high.
So they're basically betting
They're betting, yeah.
that those earnings will continue to climb.
Exactly.
Okay, so in Netflix's case, that high PE ratio could be a sign that investors believe they're just going to keep dominating
They think they're going to, stay on top.
the streaming market. Yeah, and I think it's important to remember that the streaming market itself,
Yeah.
it's rapidly taking over traditional TV.
Totally.
Right. So if Netflix can maintain that leadership position in a market that's still growing, that high PE ratio might be completely justified.
So we've got this fascinating picture emerging, right?
Yeah.
Netflix is crushing it.
They are.
Content-wise.
Uh-huh.
Their financials are strong.
Yeah.
And investors seem pretty, bullish on their future.
Yeah.
But is it all smooth sailing from here?
Right.
Or are there, potential storms on the horizon?
No investment is without risk.
Right.
Right. And Netflix definitely faces some challenges. One of the biggest, I think, is just how many streaming services are out there now.
It's true.
It's a lot.
Yeah.
You've got those established players,
Yeah.
like Disney Plus and HBO Max, and
Right.
then all these new ones popping up like Apple TV Plus and
Yeah.
Peacock.
Yeah, it's like the Wild West out there.
Totally.
Yeah. Right.
Everyone wants our eyeballs.
Yeah. Everyone's fighting for our attention. So how's Netflix going to hold on to to their crown?
Yeah, I mean, content is still king.
Yeah.
Right? And Netflix knows that. They have to just keep making those must-watch shows and movies.
Right.
But, I think it's not just about those big blockbusters anymore.
Yeah.
They've also been pretty smart about tapping into those niche markets.
Okay.
Documentaries, stand-up specials,
Yeah.
international content. It helps them appeal to way more people.
That's a really good point. It's about having something for everyone, right?
Exactly. And they can't just, kick back and relax.
Right.
They need to keep innovating, keep experimenting.
Right. Stay ahead of the curve.
Yeah. I mean, think about it. It wasn't that long ago that they totally changed their whole business model.
Right. Yeah.
Remember going from DVDs to streaming?
It's true. They disrupted themselves.
Yeah.
So, okay. So what are some of the specific risks that could really, derail Netflix's success?
Well, I think a big one is overspending
Okay.
on content.
Yeah.
Obviously, investing in good shows and movies, that's super important.
Right.
But they got to be careful with that budget
Okay.
and make sure each investment is paying off.
So it's a delicate balance.
Yeah.
They need to spend enough to attract and keep subscribers, but not so much that it eats into profits.
Exactly. And then there's the whole password sharing thing.
Oh, yeah.
That's been cutting into their potential revenue for a while.
Yeah, for sure.
I mean, they've tried a few things to
Yeah.
crack down on it,
Right.
but it's tricky.
It's so hard.
It really is because
Yeah.
they don't want to, make people mad.
No, you don't want to annoy your customer base.
Right.
I mean, I'll admit it. I've shared my password.
Oh, come on. Everyone does it.
I know. It's a cultural norm at this point.
Yeah, exactly. And changing that behavior, that's a huge challenge for Netflix.
And we can't forget about market saturation, right?
Right.
At some point, how many streaming services can people actually subscribe to?
Exactly. That's the question.
Yeah.
As the streaming market gets more crowded, people are going to start feeling overwhelmed.
Yeah.
And then they're going to cut back.
Yeah.
So Netflix needs to make sure they're providing enough value.
Right. To stay at the top of that list.
Exactly. So, yeah, I mean, they're facing competition from all sides.
There's a lot of pressure.
It is. But, I mean, they have a pretty good track record.
They do.
Of adapting and innovating.
Right.
I mean, they've faced challenges before.
Right.
And they've come out, on top.
You're right. They've always, like, exceeded expectations in the past.
Yeah.
So we probably shouldn't underestimate them.
Yeah, I agree. It's going to be really interesting to see how they, handle all this.
Totally, yeah.
Like what strategies they come up with
Right.
to stay ahead.
This makes me want to circle back to
Totally.
their monetization cycle,
Right.
that we talked about.
Mm-hmm.
Can you, like, elaborate on how that strategy could actually play out?
Yeah, for sure.
Yeah.
In this, like, increasingly competitive landscape.
Sure.
So remember, the whole idea is that if Netflix keeps delivering those, like, can't-miss shows,
Yeah.
they can raise prices every so often.
Right.
Without losing a bunch of subscribers.
Right.
But in a world with, like, a zillion streaming options,
Yeah.
are people actually going to keep paying more?
Right. Especially with everything else getting so expensive.
Yeah, exactly. So I think, whether they can pull that off, it really depends on a few things.
Okay. What are some of those things?
Well, they have to keep up that, like, high-quality content,
It makes sense.
right? If the shows start to, go downhill, people are
Yeah.
going to be way less likely to, like, swallow those price hikes.
Right. Yeah.
And they have to be strategic about how they do it, too.
Okay.
Maybe they offer, like, different tiers
Okay.
at different prices. Give people a little more choice.
Right. Flexibility.
Yeah. And they could, like, add value in other ways.
Okay.
Like offer some, like, behind-the-scenes content.
Yeah.
Or some, like, interactive features that you can't get, anywhere else.
Makes sense.
They have to convince people they're getting their money's worth.
They need to feel special. They need to feel like they're getting something special.
And I think, maybe even more importantly, they have to be upfront about it.
Oh, for sure.
Right?
Yeah.
Like, why are prices going up?
Yeah.
And how is that money going to make the content even better?
Transparency.
Yes.
You got to build that trust.
You have to.
Yeah. Okay. So it sounds like the monetization cycle is not a guaranteed slam dunk.
No.
It depends on Netflix making, like,
Smart choices.
really smart choices.
And paying attention to what people want.
Yeah.
Right.
Right.
Like, really understanding their subscribers.
Yeah. And it kind of brings up a question, too. Like,
Right.
how does this all impact their valuation?
Yeah.
Especially, that high PE ratio
Right.
we were talking
I
about.
mean, if investors are betting on all this future growth,
Yeah.
shouldn't they be thinking about those risks too?
Right.
Yeah. Like those challenges? Absolutely. I mean, the PE ratio can be helpful.
Yeah.
But it's just one piece of the puzzle,
Okay.
right? It's not the whole story.
So what else should investors be, like, paying attention to?
Yeah.
When they're trying to decide, is Netflix actually worth that? Like, premium valuation.
Well, I think they need to look beyond just those big numbers,
Okay.
like revenue and subscriber growth.
Okay, so dig deeper.
Yeah, dig deeper. Like, look at the financials
Okay.
and really try to understand how they're managing those costs,
Right.
how they're dealing with all this competition,
Yeah.
and what they're doing about things like, password sharing.
Right. And they should also be paying attention to what management says about, like, their long-term strategy.
Oh, absolutely.
Yeah.
During that earnings call.
Right. Like, how are they going to deal with the competition?
Exactly.
How are they going to balance, content spending with, like, actually making a profit?
Yeah, and that'll give investors a much better idea
Right.
of whether Netflix is set up for, continued success.
Okay, so even though Netflix has been super successful,
Yeah.
their future isn't, like, a sure thing.
Not at all.
There are both opportunities and challenges,
Right.
and investors need to think about all those things
Carefully.
before they, make a decision.
Yeah.
It sounds like, investing in Netflix,
Yeah.
it's not for the faint of heart.
Right.
There's a lot to think about.
A lot to consider.
Besides just, subscriber numbers and buzzworthy shows.
It's true. I mean, remember, the stock market is all about betting on the future.
Right.
And nobody knows for sure.
Earlier we were talking about Netflix having a high price to earnings ratio.
Right, that PE ratio.
That PE ratio.
Yep.
You explained that it means investors are willing to, like, pay a premium for their stock because they're optimistic about future growth.
Exactly.
But for someone who's not, like, a seasoned investor, can you break down, like, what that PE ratio really tells us?
Yeah.
And why it matters?
Okay, so think about it this way.
Okay.
Imagine you're buying a lemonade stand.
Right.
you wouldn't just look at how much money it's making, like right now.
Right, right.
You'd also want to know, like, does it have potential to grow?
Right, yeah.
Right. Maybe it's in a really good location.
Mm-hmm.
Or the owner has, like, a secret recipe that's bringing all the customers in.
So the PE ratio is kind of like looking at the potential of that lemonade stand to grow.
Exactly.
And make more money down the road.
Yeah, you got it.
Okay, that makes sense.
Good.
But as we've discussed, Netflix faces some pretty serious competition.
They do.
So doesn't that make their high PE ratio a little bit riskier?
I mean, it definitely adds like another layer, you
Yeah.
know, of complexity to the whole thing.
Yeah.
You know, investors have to like balance that optimism about growth
Right.
with the
Yeah.
potential challenges.
Okay.
Right. Can they keep making good content? Can they raise prices without, you know, scaring everyone off?
Right, and can they keep those subscribers engaged,
Exactly.
coming back for more?
You got it.
So it's not just about like looking at the PE ratio
No.
like by itself.
Nope.
Right. You need to consider the whole picture.
The whole picture, yeah.
Yeah.
It's about understanding like the story behind those numbers.
Oh, great.
What's driving the growth? What are their like strengths and weaknesses?
Okay.
What's their plan for, you know, tackling those challenges?
It sounds like you need to be a little bit of a detective to
Yeah.
really understand a company like Netflix
I know. Yeah.
and make an informed decision
Yeah.
about whether to invest.
I think that's a good way to put it.
Okay, so as I'm like, heading into this meeting,
Yeah.
what are some of the key takeaways I should remember about Netflix?
Well, first remember that like their success, it's all about that high quality content
Right.
that really grabs people. They have to keep innovating
Oh,
and
yeah.
making those shows and movies that people want to watch,
Okay.
you know, to stay ahead of the competition.
Right. Yeah.
Second, you know, their financials look good, but they've got those potential, you know, headwinds like rising costs
Right.
and more competition.
Okay.
And then third, that PE ratio. It shows that investors are optimistic
Yeah.
about the future, but it's not a guarantee.
Right.
You know, it all depends on how they handle those challenges.
Okay, and finally, don't be afraid to ask the tough questions.
Yes. Good one.
Like, what's their strategy for dealing with all that competition?
Uh-huh.
How are they managing, all those costs? What are their plans for the future?
Yeah, if you really dig in
Yeah.
and ask those questions, you'll get a much better sense of like, is this the right investment for me?
This has been a really, really eye-opening deep dive.
Good, I'm glad.
I feel much more prepared for this meeting now.
Awesome.
So thanks for guiding me through this.
You got it.
And to everyone listening, thanks for joining us on this deep dive into the world of Netflix.
Yeah, thanks for listening, everybody.
As we've learned, their story's far from over.
Yeah, it'll be interesting to see what happens.
And it's going to be really, fascinating to see what the next chapter holds.